If you had have bought Bird Construction back in October of 2022, you would be up 341%. That is what we talk about making some money, folks. That is a great, great return. All right, so let's take a closer look at my portfolio since 2021 when we opened this YouTube channel. So some people might say, well, this guy doesn't know what he's talking about. He picked Tilray to not do well, or he doesn't have any followers. So this guy can't make us any money. Well, let's take a closer look. So I've never taken a video down. Titanium Transportation Corporation, ticker symbol TTNM. When I first recommended it back at this point of the video, which was back when September 14th, 2022, it was a while ago now. It was trading at $2.36 a share, and now it was 150 as of June 13th, 2025. So those prices might have fluctuated. It is a month later, so I'm not 100% sure where it is. Great first pick. Way to break the ice there with a 36% loss. Not great. Why do I feel that this is? Well, this is a company that is definitely impacted by tariffs and the uncertainty when you're going cross border with hauling. You're just not 100% sure what is happening right now. And there's also in that space in the transportation in the short and long haul sector, you're looking at a lot of consolidation. So smaller companies are being bought by larger companies. And when this happens, there's a lot of debt on companies' balance sheets. So Titanium, as a smaller player, they were a serial acquirer for quite some time. 2020, 2021, 2022, they were acquiring a lot of companies, and that just accrues a lot of debt on your balance sheet. So I think the combination of those two things has definitely hurt the share price. This is a big winner. Bird Construction. I picked this one while I said that I liked it back in October of 2022. And yeah, it was trading at $6.33 a share. Now it's trading at just under $28 a share. Again, these prices were in June, so it might have changed since then. If you had have bought Bird Construction back in October of 2022, you would be up 341%. That is what we talk about making some money, folks. That is a great, great return. Bird Construction is still one of my favorite companies, monthly dividend payer, and good financials. At the time, the debt was a little bit high, but when it made a few acquisitions of companies out west, it really merged well with their current portfolio and it just made their company completely take off. It's like a turnkey solution now, and they get a lot of big contracts. So this is a company, it's been around since the 1910s, 1920s, something like that. Bird Construction, fantastic company. And if you had invested in that a while back, you would be doing great. You'd be on easy street. My next pick, I just went on a string here of three picks that were just fire. Power Corp of Canada, I liked it back in October of 2022. This would have been a good month. Um, Again, company was trading at $33 a share. It was in those mid 30s, in those doldrums of mid 30s, and I really liked it because it had Wealthsimple. And it's a platform I personally use. I will put my Wealthsimple link down in the description. If you sign up, we both get 25 bucks, so everybody wins. And now it's in the 50s. That's a nice little 57% gain on your money. And this is a company I still like. Great dividend payer, lots of cash on hand, very, very well diversified financial company here in Canada. Russell Metals. I picked this one in November. It was in the 20s. I can't believe this company's in the 20s. It's just a really boring company. And now it's in the 40s. Again, you would have been close to 50% return on your money if you had bought it at that time. I mean, just a very, very boring company. Most people are buying tech companies and AI companies and semiconductor companies, structural steel. Like, not a really exciting company, but hey, as Peter Lynch would say, just drive by the place and you see it's busy. It's probably a good sign. And a lot of times, those types of companies that are just ho hum, they have great margins, they make a lot of money, they pay out a great dividend, and their dividend keeps increasing year over year. So, hey, H&R REIT was a company that I liked back in the 13s, in the 1325 area back in November 2022. It has dropped since, and I liked it at the time because it was spinning off some of its retail REITs and it was focusing more on residential. But what's happened since 2022, residential has just, I mean, it's just kind of fallen off a cliff. It's just really, really hard with interest rates where they are. It is hard to borrow money for the average person. So these properties, it's just hard to rent right now. A lot of places are just really, really expensive. You're seeing on Yahoo Finance, the only sensible places in the housing markets right now are like Pittsburgh, St. Louis, and like one other place in America. So this is a company I feel like that has really affected its bottom line. And maybe when you make some changes internally to your asset mix, take some time to figure out profitability and figure out how to continue to grow your margins and just kind of you're making a new identity for yourself. When you're doing that, it takes some time. So I still like H&R REIT, monthly dividend payer, of course. If you're looking at investing in real estate, I would rather invest in real estate through REITs than through actual properties because I am absolutely useless with my hands. So there you have it, folks. Not Tim the Toolman Taylor here. Imperial Oil. This was a great pick for me back in March of 2023. If you can afford that $100 price tag, or that's even a $65 price tag back in 2023, you would have been rewarded. I mean, it's again 70% gain. Just an unbelievable company is Imperial Oil. And I know some people are scared off by oil companies right now, but we're still really reliant on oil and we're going to continue to be. And I know the trends are shifting towards EVs and electrification, natural gas, but when you look at the financials, for every dollar it makes in revenue, it's putting 25 cents in the bank. So still really good margins, still really, really a successful company and has been for a long time. Another boring company that has great dividend and is is a company that I really like on the north side of the border. I think you can buy it on the US side too. I think it trades in the on the NYSE, but you'd have to double check on that one. Verizon. This was a company I liked and hasn't really grown much. And a 10% return if you had bought it back when I made this video in 2023, but a company that has a lot of debt. Any telecoms have a lot of debt. Usually when you're doing a current ratio for telecoms, you're not even at a one ratio. Usually it has a little bit more current liabilities than current assets just because the liabilities are so high. When you're rolling out 5G, it ain't cheap to roll out 5G across North America or across the US or across Canada, wherever you are doing it. So, yeah, I think that but everybody needs a phone though. Everybody needs wireless. Everybody needs Wi-Fi. So, hey, it's a very, very, very cash-rich business. There's a lot of money coming in, but there's also a lot of money going out. So that's the one downside to companies that are telecom plays. Target. This was a company I had one to monitor, and yeah, this was a yeah, down 27%. I liked this company at the time because they had a situation where they had some like LGBT stuff in their stores, clothes. They were really pushing a narrative, and people, consumers, just were like, they weren't having it. And the stock price dropped a lot in a couple of days just because of this. And I felt like this company would rebound because those are kind of short-term things that people tend to forget a month or two down the road. And then when the financials come out, they had a great quarter and people forget about that. But not this case. Target, again, another company that's really going to be pressured by tariffs because a lot of the stuff that they're getting comes from countries that are probably going to get hit with tariffs. So though their margins are going to get hurt. Retail is going to be interesting to see now that in mid-July how everything goes. I know Walmart have already complained about the tariffs. It should be interesting to see what happens with companies like Target, like Walmart, like Giant Tiger in Canada, another a retailer that's similar. Even companies like Dollarama, Dollar General should be interesting to see because those companies, especially the dollar stores, they operate on such tight margins. Should be very interesting to see the financial statements for those companies coming down the pipe. ASC Technology. I still love this company, even though there's a lot of geopolitical risk. It's a Taiwanese company, and anytime you're getting involved with Taiwan, there's always that risk of China invading it. So there's some fear there from investors. This is a company that, if you're looking at it, a different play on semiconductors, I still like it. Is it going to be like 100% gain for you? No, but I think it's going to be a steady double-digit gain, just because we're only in the second, third inning of AI, and these guys kind of put the toppings on a microchip. Their biggest consumer, their biggest customer was Apple for quite some time. I haven't looked at it in a while, but definitely one to take a closer look at. Nutrien, I remember doing this video in Florida. Good company. Um, you're looking at a company. It's so 15% gain, not bad. Um, Mostly fertilizer, potash. Parkland Fuels. This company was bought out recently. I gotta go do a deep dive on Parkland Fuels again. This company was bought out in 2025, or there was some type of acquisition of it, or some of its shares, like a large portion of its shares. Gotta do some research on it. Maybe a new video coming down the pipe. Down 13% since I made this video, but again, with that acquisition, maybe it went up. I'm gonna have to take a closer look. Okay, Kinross Gold, huge winner. This was trading at $6 a share back when I made this video in 2024. 212% gain year over year. And why is that? Well, there's a lot of people want to invest in gold when there's a lot of uncertainty. And with tariffs, since Trump has become president, there has been a lot of uncertainty. There's a tariff one day, then not a tariff another. Then one day Trump is fighting with Elon Musk, then he's friends with him. Then there's an Iranian war, then there's not. There's been a lot of uncertainty in the markets, and people want to flock, smart money flocks to safe havens in uncertain times. And there you go. That would have been a nice payday. Kind of wish I had held that anyways. I flipped it a few times. I kind of wish I had held it. Albapetra Energy, this one I'm just going to bury Horowitz, give myself a pat on the back for this one because I don't know where I found this, but what a nice little company. Natural gas play. The financials were awesome for a Pink Sheets company. Usually Pink Sheets, you're looking at like how long is this thing going to go until it goes bankrupt. But honestly, Albapetra's around for the long term. The spike was from they increased not only their production in Brazil has improved, but they added some Canadian wells, and they're shifting a little bit more business back towards the Western Canadian side. So it is a Canadian company that operates in South America. So I think a lot of investors like the fact that there's less risk of geopolitical tension in Canada. So they've also made some good decisions and they continue to up their production. So definitely a company that I like, and I still like it. Do I like it as much in the sixes as I did in the fours? Oh, goodness, no. But still, I think there's still some legs for that to grow because natural gas and nuclear, I think, are going to be very popular in the AI game. We're going to need fuel to run all of these supercomputers and robots and stuff like that, and I think that that is a very interesting play. Altria Group, I said to avoid it. And yeah, it's up 40%. It's up $17 a share since I made that video about it. So, hey, you can't always be right. Ted Lindsay still got out 7 times out of 10. And Derek Jeter, is in the Hall of Fame, one of the greatest ever, hitting 300. So you got wrong 7 out of 10. So, yeah, I don't want to be comparing myself to those people though. They're a little bit more famous and better looking. Restaurant Brands International, ticker symbol QSR. This was a company, and again, even though it's down, this would be for me as a buy low or a company I want to continue to invest in. Anytime you drive by Tim Hortons, that place is on wheels if you're in Canada. I don't care. The lineup is always busy. It's just a great company. They continue to diversify their food offerings. I think that might upset some people because it is a traditional donut shop, but they understand high margin foods are in things like pizzas and in sandwiches, soup and sandwich, versus your traditional donuts. How many donuts or muffins they have to sell to turn a large profit versus you're dealing with pizzas and these items that are just more margin. But coffee will always be their number one seller. And I still think that their acquisition of Popeyes was such a great ad. I think it's a very nice company. Firehouse Subs is an interesting play too, but they haven't gotten the business out of that just yet. Their numbers have been relatively flat on the Firehouse side, but Popeyes is continuing to grow. I mean, you go down to Toronto. I mean, there's one on every corner. It must be a cheaper franchise fee because it is really after growing in Toronto area. Nike. I was down. I like Nike, and this was a company now. I think this has gone up since the recent earnings. I haven't checked it, but I think the recent earnings were a hit. This is a Bill Ackman, Gotham Financial Partners or whatever, Gotham Partners, whatever he calls it. This is a darling of Bill Ackman. And so is Google. But Nike is one of his, and so is Hilton Brands. But Nike, I still like it. I mean, it's got one of the best brands ever. I mean, that check mark is so iconic. And even though I'm wearing an Under Armour shirt right now, I've got a Nike pair of shorts on. So I think that that brand recognition is still there. They're still really behind popular sports like football and basketball. So, I mean, I think Air Jordans are going to stop being popular. This is one of the most popular collector's items of all time. And the clothing is still, even though tariffs are a higher risk, clothing is still really high margin, guys. Very successful company. And I think Nike, that's a company that I would suggest if you are an American to monitor when it dips. I'm not saying to buy because, hey, do your own due diligence, but monitor the dips. Cisco, this I still love this company. I would still buy it. Anytime it's below a 20 PE, I'd be scooping this up. Just a great company. Just go look at the financials. Under the hood, this company's flawless. Absolutely love it. I think it's undervalued too. Anytime you can do your dividend discount models, this is an undervalued company through and through. I think it's worth more than $64 a share, and I think there's a lot of margin of safety there too. Tilray. I said to avoid this, and I got a lot of heat on TikTok, or not TikTok, sorry. I got a lot of heat on YouTube for this one. A lot of people upset at me on this one, saying that, oh, well, this guy doesn't always talk about it. He has no followers. He's a loser, whatever. I'm okay. Yeah, well, all right. It's your money, not mine. Um, as of June 13th, this was 40 cents. I've heard it's gone a little bit of run lately. I think marijuana or cannabis companies have gone on a little bit of a run. I had a guy write me the other day saying, well, it's got a really diverse product mix. It's got beverages now, stuff like that. I'm assuming it has edibles. There's only one cannabis company that I've seen online that was profitable for more than one quarter or like a stretch of time where it was profitable. And if anybody's got some, please comment in the comments and I will gladly review them and say like I was wrong. But Tilray, the financials, the more money it made, the more money it lost. Like it had a positive correlation for revenue and money loss. That is not a good look. That means your margins are terrible. That means you can't scale. That means that no matter how much money you make, you're not going to make, no matter how much money you bring in, you're not going to have any at the end of the day. So that's my problem with Tilray. And that was my problem with Hexo back in a while ago, back when that was trading in like $5 plus, and now it's after plummeting. Actually, I think it might be a private company now, is Hexo, or it might have gotten bought out. All right, let's go with the final two. AMD, ticker symbol AMD. I mean, I still love AMD. The only problem with AMD right now is it's trading. Actually, since this video was made, it was $116. This has gone up to like 150. So it was 6%. That's gone way up. It had an investor day and it was quiet. It had an investor day in June and it went quiet. Like everybody, it actually went down. And I was scratching my head because I'm like, Sam Altman's walking out on the stage here. I watched the investor presentation and Sam Altman's walking on the stage. You're talking about how awesome this company is and the applications of it. And they're rolling out these big names. They're involved with all these big Mag 7 companies. Microsoft, the guy from Microsoft came, that wasn't Bill Gates, but like one of Microsoft's head guys from Azure came out. When you're rolling out these type of people, you should take notice. And the only problem I have with AMD is it's trading at like 100 times earnings. But Lisa Su is a genius, great CEO. I think AMD is in a great position to grow. I think it's going to be, I mean, I'm just going to spitball here, but this is going to be a 175 plus stock in the future because AI is just going to continue to grow and grow and grow. We're only starting, and it is a very interesting play. I think it's going to be, it's not Nvidia, but I think it can also win. This is not a zero-sum game. And Synovus, I had a void. Even though I personally love this company, I had a void because in its last earnings call, I just don't like their management. I mean, I think John McKenzie, I just, as The Rock used to say, I think he's a candy ass. I just don't like the way he runs that company. I think it should be so much more successful. Just go look at all its metrics, like return on assets, return on equity, numbers that when you look at it, a CEO should look at these numbers and be like, our Suncor is killing us. Imperial is killing us in these metrics. Metrics that say a lot about CEOs, like how are you using your money to put it to make more money, essentially. And I'm just like, wow. This is a company to me though, it had a poor quarter when I made this video, but its last quarter was better. Like it had a beat, it had a surprise, like a surprise in earnings. And I think their next quarter is going to continue to get better once they get the West White Rose going out on the Grand Banks of Newfoundland. This is going to be a million barrels of oil producer probably by 2026. Like mid this time next year, you're going to probably see Cenovus producing around a million barrels of oil a day. If they can figure out downstream, I think this is going to be a winner. And even though I'm saying avoid it, it was just because of that earnings. That earnings worried me, and their CEO worries me. But they obviously have a plan, and it's trading. Actually, it's trading less than that now. I think it's in like the 19s. But but still, personally speaking, Synovus is an intriguing play, even though I said avoid it. Anyway, that's it. If you have any businesses or companies that you want me to do a deep dive on, feel free. I should add Payson Systems. Payson Systems trading like 1260 as of this video. So should be interesting to see now where that company goes. Feel free to like and subscribe to the channel. I love doing this. It's just a hobby. I do it out of for fun and hopefully make viewers some money. It's getting harder and harder to make money these days. Robots replacing a lot of people. So if I can make you some money in the markets, that would be awesome. Always do your due diligence on a stock or companies. You are buying a piece of a company. You're not buying a stock. A stock is a piece of the pie. Understand that and learn how to read financial statements if you do not know how to. That is the foundation to be a great investor.